Billionaire investor Bill Ackman achieved, get this, a 70% return in the stock market in 2020. While most investors were struggling, Ackman was absolutely crushing it. Now, this is interesting because Ackman has been talking about his thoughts on 2021, where he's investing how 2021 is different to 2020 and where he thinks the market is heading this year. And that's the crux of what I want to cover in this video. But very quickly, for those who don't know who Ackman is, he's a billionaire hedge fund manager. He's a longtime follower of Warren Buffett. He's considered to be a contrarian investor, and he was one of the few who actually made money from the pandemic market crash in March 2020. He did this through the credit markets. But that's 2020, let's talk about 2021. What companies have the opportunity to do well this year?
What the pandemic has done is it's really disrupted, the companies with bad balance sheets, without being technologically enabled, have been impaired. Many of them, unfortunately, the smaller ones have gone out of business. Whereas the well-capitalized dominant companies have actually improved their market position. So, surviving a pandemic or having the ability to survive a pandemic puts you in a strong competitive position coming out of it. And so you think, simple example, Starbucks is a significant holding. Think about how many fewer coffee shops they're going to be competing against. One of their principal competitors in China, a company called Luckin that was building very large number of stores every year, turned out to have been a fraud. When the tide rolls out, you see who's swimming naked, so to speak.
So I'll try explain a little bit as to what he's getting at. So, what happened in the 2020 pandemic? A lot of companies struggled, right? Some obviously a lot more than others. This resulted in the companies who had worse financial positions to close doors, shut down. And this meant the companies who were in strong financial positions got even stronger because the competition weakened. So the strong companies got stronger and the weak companies got weaker. This is why you've seen companies like Amazon shoot up in share price. Walmart, same thing. Tesla too. They all went up because the pandemic wiped out some of their competition. It says, Warren Buffett says, only when the tide goes out do you discover who's been swimming naked. When things like the 2020 pandemic comes along, if your business model is not watertight, if it's not solid, if your finances are not ready, you will get wiped out. And this is good for your competition. So what is he trying to say? It's those bigger companies that have done well and will do well from the pandemic. And if we look at Ackman's portfolio, which we'll see later on, it's those bigger companies that he owns. So 2020, all in all, we can agree it wasn't the greatest year for the economy, and the stock market was pretty average. Where does Ackman see stocks heading in 2021?
I do think we are set up for a very strong recovery in 2021. I think the virus is going to be frightening and a disaster for the next, call it 90, 120 days. So that's the big negative news in the short term. But we have multiple successful vaccines and probably more coming. We're going to have fairly wide distribution of those vaccines beginning as early as 30 days from now. And I think by the second half of next year, we'll be probably out of the pandemic for the most part, in the first, kind of what you might call first world. And I think you have a new president coming in who's going to be very concerned about the economic recovery. So I don't think Biden's going to take any steps to increase corporate taxes, for example, or even personal income taxes. You have Janet Yellen now running the Fed, who's going to be, I think, quite supportive of employment and the economy. So you can expect low interest rates. You have well-capitalized banks. And then you have a large buildup of savings on the part of Americans, and really globally, as people haven't gone out to eat, they haven't gone out to the theater, they haven't gone to a movie, they haven't gotten on a plane, and I would say animal spirits are building up. I don't know about you, but I am. The moment I can actually travel and go places, so I think you're going to see a huge recovery, even in business.
So he thinks specifically with the second half of 2021, we're gonna see things pick up. Because at the end of the day, how long can you stay locked up, shut down, unable to travel, unable to work, or go out for a gathering? There's only so long that you can get away with telling people your business needs to be closed, stay at home. Eventually people need to get on with their lives, and as Ackman was saying, we're all starting to get itchy feet now. We all want to get on with our lives, and at least Ackman thinks in 2021 that's going to start happening. This is great for businesses. We've also got a new president coming in. I'm not sure if you guys are aware of that one, not sure how you feel about it. Nevertheless, there's big motivation for the president to grow the economy. All voters will be looking to see how he does. It's the same with the Fed. They have similar motivation to help the economy rebound. So you've got the people who are gunning for a strong economy, a reopening, and a strong stock market. And then you've got the governments, you've got the Fed, the business owners all backing this up too. And this is all part of the recipe that Ackman's talking about for stocks to go well in 2021. Another thing that he mentions is the re-strengthening, the refocusing, the leaning up of a lot of companies. Here's what he said.
So I think you're going to see a fairly rapid recovery beginning sometime late Q2, Q3, Q4. Low interest rate environment, a ton of savings to be deployed. It could be pretty, favorable. And then you have a lot of companies that use the crisis to kind of tighten up their cost structure. Hilton cut, I think, something like 25 to 30% of their corporate overhead costs. And success does breed a certain looseness with expenses, and a crisis does the opposite. So you can have some leaned up companies coming out into a very strong environment. So I think there's a pretty good chance for a very strong stock market next year.
You see, in a bull market, especially nearing the end of one, companies often become a bit loose with their spending. Oh yeah, it doesn't matter, we'll give bonuses out everywhere. We'll upgrade our car fleet, we'll modernize the buildings. Some of these expenses are not necessary. And what a pandemic does is it forces companies to cut down to essential spending, and it forces them to refocus on their business and mission. When the economy starts to open up, this is a recipe for success in the market because you've got these lean, driven companies mixed with a market of people ready to consume and invest. These are the factors that add up to Ackman's prediction for a hot stock market, so to speak. So the question becomes, well, how do we profit from this? What strategy can we use? Ackman, as I mentioned earlier on, he achieved a 70% return in 2020. You go and look at the market, they achieved a 16% return that year. So he's not a bad person to go to for advice, let's just say that. He said recently, as Buffett said, diversification is protection against ignorance. So we own very few investments. We might identify one or possibly two investments a year, and most importantly, we selected businesses for their inherent robustness. Almost all of our companies are strong investment grade companies, so there's not a balance sheet threat to the businesses we own. Basically, they focus on buying very few stocks, but the ones that they do buy are high quality, robust, and financially well positioned. For example, his largest stock position is Lowe's, the retail company. That's been around for almost 100 years. It's got a strong business model, strong customer base, and that makes up 23.3% of his portfolio. It's the same deal with his second largest stock, Chipotle. It's well known around the world, strong customer base, 16.3% of his portfolio. So he owns these big stocks that won't just get blown away easily in a pandemic or a recession. Their competition might, but they are much more likely to stay. E.g. Starbucks, that's 9.9% of Ackman's portfolio. Small coffee shops and maybe even medium-sized ones might have to shut down, but it's gonna take a lot for Starbucks to shut down. What this does is it lowers the competition that they have to compete with. And I think it's a smart strategy. You don't need to own every stock in the world. If you can just pick, let's say, 6 amazing quality businesses with strong potential and strong financial positions, I think there's a lot of money to be made in 2021, but you got to invest smartly.